you everyone for joining us for today's program. Let's go ahead and get started. Welcome to today's program. This is part of the Chapter Leader Success Series. The series of programs is sponsored by Cru Network Chapters. So a big thank you to all chapters who are part of the Chapter Leadership Circle. These chapters provide funding for programming such as this, which is intended to help chapter leaders. In today's program, we will be discussing chapter finances. This program is being recorded, and links to access the recording and slides will be emailed to all registrants and available from CruBiz next week. So without further ado, I'll turn it over to Cru Network CFO and COO, Justin Hawkins.
Thank you very much, Jenny, and we are excited to be able to present to you all today and just kind of touch base with you as we gear up for the next fiscal year. I know many of you are either treasurers or other leaders, presidents, or other leaders within your chapters. So we hope to provide some tools for you to use during your term of service in that position that will be helpful to highlight some of the different tasks as well as deadlines that you will need for the upcoming year. While Cru Network does try to rotate our auditors periodically, I would like to introduce our presenters today. Erica Dvorsky and Michelle Hammond are with SS&C Solutions. SS&C Solutions has been involved in our most recent engagement for audit services. And then they also do prepare the tax return preparation for several of the chapters that Cru Network provides accounting services for. So they are very familiar. Both Erica and Michelle specialize in nonprofit accounting within their firm. So they're very familiar not only with Cru Network as an organization, but with many of our chapters, as well as nonprofit organization activities as well. I would like to note that we would request that if you have any questions that occur during this presentation, if you'd use the Q&A feature in your Zoom, and we'll have some time at the end for questions and answers, and we'll try to get to any questions that you may have at that point. So this time I will turn it over to Michelle and Erica.
There we go. Hey, everybody. I'm Michelle. And that's Erica.
And I'm Erica. I'm just trying to share my screen, so multitasking.
Appreciate you guys signing up for this today. Finances, when for some of you guys, this is either right after or right before lunch. So we will definitely try to make it worth your while and give you some tools and some techniques and some tips to help you manage your individual chapters and organizations, and some things that we've learned over the years working with the different Cru chapters, and then also with Cru Network and the foundation. And Erica is a 990 goddess guru something, so she'll end the presentation talking a lot about 990s, what they mean, what's important, and what specifically it means to the Cru chapters. So I'll get started, and then Erica will wrap it up. So when we talk about the responsibilities of the board of directors, there's three main pieces. I'm not going to spend a lot of time on the first two main pieces as it relates to the strategic responsibilities of the board of directors. This is, determining the mission and the strategic plan and the steps to get there, and then hiring or volunteering people what their part will be as it relates to implementing that plan through volunteers. They have legal responsibilities as it relates to the duty of care to the organization, of loyalty with no self-dealing, and the duty of obedience and doing the right thing for the organization in front of one's own self. We're going to talk today about financial responsibilities because we're accountants and that's what we're pretty good at. Flip to the next one. And you did. It just is, yes. So the financial responsibilities of the board of directors. And so this is the board of directors usually puts in charge the treasurer to oversee the fiduciary responsibilities. And then that treasurer can pull together a finance committee at the direction of the board who specifically oversee these responsibilities and then report back to the board of directors of an organization. So we've grouped it into 6 bullet points to what those actual fiduciary responsibilities look like. And the first one listed is as it relates to internal control and risk management of an organization, going through the processes and procedures to help safeguard the assets of the organization. And we can talk a little bit more about that in a second. Just reading and understanding basic financial statements. You know, to be the treasurer, to be on the finance committee, you don't have to be a CPA who spends all their day staring at financial statements and dissecting them, but understanding the basic financial statements for your organization and the key numbers that we need to watch to be able to effectively govern and meet the fiduciary responsibilities. And then asking questions. I always feel like it doesn't say that on there, but reading, understanding, and questioning your basic financial statements so that you feel comfortable with those numbers as being presented to you for review. Also, approving the annual budget and then looking periodically as it relates to how we're doing compared to budget. You know, I see a lot of organizations that maybe they take the time to do the budget, but then when you get your financial statements every month or every other month, they're comparing it to where you were last year. And so the talk becomes more where we are today versus where we are last year, which might be 2 completely different places, especially now during COVID, right? I think that the better comparison and a better way to spend your time with financials is to take the time to do the budget and then to compare the budget to actual. So you're saying, here's our expectations for this period, and here's how we measured up, as opposed to continually looking in the rearview mirror and telling a story about what's different from today to tomorrow. So I think budgeting is really important, even if it's a small budget. You know, taking the time to lay out those expectations of how you think the year is going to go. The next piece is ensuring financial requirements and tax obligations have been met. I don't know how many of your chapters have paid payroll or sales tax or other different obligations, but this is what we're really pointing to in this. A lot of not-for-profits that we have worked with over the years, sometimes in some way, you know, through the best intentions of a volunteer doing payroll, end up not paying their payroll taxes or getting behind on payroll taxes or sales tax or other different obligations. And the last person in the world you want to owe money to is the IRS. So, you know, you don't have to be, the finance committee doesn't have to be the people doing the payroll tax calculations and making sure those things are paid, but on a quarterly basis, affirming with either your outside payroll company or your office manager that those things are being taken care of is very important. The next is the IRS, the Form 990, and many of the different states and locations have their own filings. But the Form 990 actually even has a box that says, did the board of directors review and approve this? And again, the board can have the finance committee do it at their direction. But if that box is checked no, because it's not part of our policies and procedures, it's kind of a flag that probably we aren't paying attention to our reporting. And then for the organizations that are lucky enough to have investments, as we always say, who've been able to put away enough reserves and to build a rainy day fund or to build a strategic investment plan to allow for future scholarships or activities, that we have a strategy and a plan that says that we have purposefully invested that money in accordance with how the chapter believes that it should be done. So that we don't, for example, say that we have all of our investments in I don't know, international stocks only in a third world country, you know, that we're saying maybe we focus on CDs and laddering, or an equity mix with bonds, just so, you know, and that we measure what we're doing with our investments to the approved strategy that we have in place. I'm not saying that any strategy is right or wrong, but just that we have one and we've agreed to it, and then we're measuring ourselves to what we said that we were going to do with our investments. So I was talking a little bit about the internal controls, and for on that first bullet back there, and I think, you know, internal controls mean something different to every organization based upon their size. But at the end of the day, it really kind of comes down to a couple key pieces, that you work on the physical controls and the custody of assets surrounding the act of cash disbursements. So that can be through use of credit cards or checks or ACHs, that you have policies about how things are paid, how they're approved, and what that really looks like with key spending policies. And then on the flip side, you talk about how cash and checks and ACHs are received by your organization, including events. So do we have 2 people who open the mail? Do we promote everybody direct depositing amounts for dues or different things into our accounts? What are some of the things that we do to make sure that all the cash going out the door is going to the right place and is approved, and all the cash coming in the door actually makes it and gets coded to the appropriate place? And by some of that is through separation of duties, where I had mentioned there a second ago, you know, 2 people opening the mail for when the checks are coming in the door to make sure that those are being accounted for appropriately, to maybe on the cash disbursement side, 1 person cuts the checks and then the other person signs the checks to make sure that no one person can cut checks, sign it, and run off to Tahiti with all of the money in our organization. So just taking the time to say, what is the right separation or segregation of duties for our size chapter, and how do we make sure that those are implemented and stuck and maintained? Then the last piece for internal controls is about financial reporting. So this is getting those financial statements that I talked about before, compared to budget, timely and accurate and consistent. So I think for most of the organizations that I've worked with over the years, finance committee members know something is probably going wrong when the financial statements used to come on the 10th or the 12th. And then they start coming on the 20th, and then the 30th, and then maybe you don't have them at that next meeting. There's always a good reason, right? But making sure that that's being addressed and understanding what the time frame is, and that it's being adhered to, because sometimes that's covering up problems in an organization. That they're accurate, that there's not a lot of changes that are happening after you reviewed the financial statements. So that, you know, if you look at June, it's still June, and nobody is going back and changing what June looks like in the accounting system, and that your questions are answered when you're asking the person who prepared the financial statements. And that they're consistent. You know, if you're constantly seeing the financial statements in different ways, it probably is because somebody's doing them maybe in Excel and not necessarily in a set accounting system. And that you can want to make sure that you can consistently see that information so that you can build patterns and do things over time, set expectations as you look for those things over time. So policies and procedures, as it relates specifically to financial policies, these kind of support the things that we just talked about, right? Consistent review of the financial statements by the board of directors. Do we look at monthly financial statements produced by the 15th or 20th of every month? What does that look like? And these are the 3 reports we want to see. Making sure that you have an annual budgeting policy, that you'll do a budget in this month to be approved by the board about this time, and that we're going to continually measure up our results for that next year against that budget. Through the budgeting process also is the consideration of reserves. A not-for-profit does not mean we have to get to zero at the end of every year. A good, strong policy provides, a good, strong budget provides for some net income. Well, net income is an okay word in chapters or in not-for-profits that allow us to build a reserve that allows us to continue to do our mission regardless of the circumstances that might be happening. So if you have some days cash on hand and COVID happens and things change, or 2008 or 2009 happens, right? And things change pretty dramatically, that we have enough in reserves to be able to continue on with what our core mission is and the people that we serve. And then the last is the spending policy, and that goes hand in hand with the cash disbursement policy about do we not use related parties? And if we do pay fees to somebody who also happens to be a member, what's our policy surrounding that? You know, who can write a $5,000 check, or who can sign a $5,000 check? Who can do a $100 credit card charge with the funds of the organization? So just going through for however it fits. There's no one size fits all for every chapter even, but whatever fits your organization, and have it documented and approved by the board of directors so that everybody knows the rules surrounding, you know, the safety of the physical assets of the organization. And then I will have outkicked my knowledge of policies because I'm the financial side. Erica was actually the CEO of a not-for-profit organization here in Lawrence. And so she sees things through a little bit of a different lens. So I'm going to let her talk about our gift acceptance policies and some of the other ones that are important and tie right back into the financial side of the business.
Great. Thanks, Michelle. And this is fun because, you know, Michelle and I are about 2 offices over from each other, and I'm seeing that we've got 92 participants on this, which is exciting, but it also feels like just Michelle and I are having just a regular old conversation. It's exciting to be able to talk with you all. I saw a few people make some, you know, write in the chat, and these are familiar names, as I've worked with many of you on your 990s for your chapters. So talking a little bit about gift acceptance, and this is really you know, as members of Cru Network, and you know, your structure is that you are a 501c6, and there's a whole long list of different types of charities, but the 501c6 has some unique characteristics. When a lot of not-for-profits, you know, say we're a not-for-profit, they're saying I'm a 501c3 and I'm eligible for charitable contributions. 501c6s are charities under the IRS code, but they are not eligible for charitable contributions. So the reason why it's important to have a gift acceptance policy is because as you have volunteers out working and communicating with folks, you want to make sure they're communicating as clearly as possibly and as consistently as possibly year over year, to make sure that if there are gifts being offered, that there is a process in place to accept those. In my own personal horror story, in the absence of a gift acceptance policy, I inadvertently accepted a contribution that we could literally not get rid of. It was actually cemetery plots, which is, you know, a whole nother story. But you know, there's we learn from mistakes, and so I'm here to say having a gift acceptance policy is really important. And especially now in recent modifications to the accounting standards for nonprofits, really there's 2 categories of assets. There's with donor restrictions and without donor restrictions. And really that was part of the financial world saying, really when it comes to any contribution, charitable, you know, whether they got a tax deduction or not, if there's a donor intent, it stays with it. There's about hundreds of pages of articles of people getting their name pulled from a building, or, schools, universities losing significant sums of money because they didn't follow the donor's directions. So having that gift acceptance policy that outlines, what will we take? Because in some cases you literally can't afford to get rid of it. But then also, what are we offering to folks? How do we track these donor restrictions? If somebody says, I want to give you $50,000 to do this particular program that is very much within your wheelhouse, but you step back and look at it and it's going to cost you $100,000 to do it, are you positioned to generate another $50,000 to do that program? Or do you have to say, no, sorry, you can either give us $100,000 to do that program, or we can say no, thank you. And as hard as that is to say, because I think nonprofits are always trying to find, a dime here and a nickel there, it is really important to stick to your guns on that and make sure that we're doing the things that are tied to our mission consistently, day in, day out. And sometimes we get a little distracted by the shiny things, when there's a new opportunity and a new donor that wants to be engaged in this way. When I think about the opportunity that your chapters have, the networks that you have built, there are probably lots of people with individual motivations and individual desires. And those are great and those are important and those should be leveraged, but Cru may or may not be the vehicle for them to leverage that. So having those policies in place to really make sure that you can deliver that consistent product that is absolutely within your wheelhouse and you leverages your greatest gifts.
Hey, Erica,
Yes.
I might cut in here. We had a couple questions that came through, and just kind of to clarify on the gifts. When you mentioned that the gift has to stay with your organization or you're stuck with it, you're speaking that primarily related to a donor restriction where the donor gives you something, or the cemetery plot, you can't sell it in that case, but that you must use any money that comes in needs to be used for the purpose for which it's been given.
Mm-hmm.
A couple other questions that came up. So if a sponsor gets a gift for sponsoring, are there limitations on what we can give the sponsor? You want to talk about that in unrelated business?
Yeah,
Okay.
yeah. No, absolutely. Most of you have, I've seen lots of your sponsorship guides, and you have kind of expectations. The critical phrase that's used in a lot of the 990 and the IRS communication around this is tangible benefit. You can't, when there's a tangible benefit, then that's where the conversation shifts. You can't give a tax deduction if there's a tangible benefit. You have to subtract that amount. In most cases, the benefit that you all are providing is intangible. It's marketing, it's involvement in an event and an activity. If they don't show up, honestly, they get limited benefit. If they don't engage, they get limited benefit. So there's a lot. So I think the phrasing of tangible benefit is one that's important to keep in mind as you're communicating. So if somebody says, I'm gonna give you a sponsorship, and you say, great, we're gonna give you a golf membership over here and you get this many rounds of free golf. That's where you get into the tangible benefit, and that's where things start to get a little bit sticky and complicated.
And then most of our chapters are 501c6 organizations, so it's not a charitable donation. For Canada, there's a nonprofit organization there as well. So for a 501c6 receiving a gift, or it's really a sponsorship payment, it's not really a gift,
right?
As in terms of gifts. So I think that was kind of providing some additional clarification to that point as well. So.
Yeah, and I will say that those. Unfortunately, when we're talking to folks, there's a lot of interchangeability with that terminology. And I think Justin brings up a really good point. As you're working and, as you're developing or framing or reviewing your gift acceptance policy, being really clear on what you call things. If somebody's going to make a contribution to, say, Cru Foundation because they want to support the network of the network of scholarships, that is charitable. That is eligible for charitable deduction because that is a 501c3. And so then that is a charitable gift. But a lot of donors and, a lot of sponsors and other folks, they see it all as a gift because they're writing a check, right? And so I think for you as an organization to be really clear what you call things, that I will say that the IRS language is pretty inconsistent on this, and so I'm not sure I would lean upon that one to depend upon. So, any other questions, or should I keep going?
I don't want to take up too much time for questions right now, but
Okay.
I think we do have time while we're on this slide really quick on reserves. The question was, how much should we have in reserves? I don't know if you want to address that or if you'd like me to add my comments.
Justin, you start.
Okay.
I want to hear your perspective, and then
Okay.
we'll toss it over to Michelle and see if you guys see eye to eye on this one.
Very good. So my perspective is it depends. In conversations that I've had with other chapter leaders, it really does depend on your personal situation. As Michelle mentioned, the purpose of having those reserves is it enables you to continue your operations, you being able to fulfill your mission of the organization and carry on. If for whatever reasons, economic circumstances or other, your revenues would be cut significantly, you would have to either cut back membership or possibly dissolve the organization. So having a healthy reserves is a good thing, so that it enables you to carry on the operations. Cru Network, for example, we have our reserves policy for our sustaining reserves. Our target balance is 1 year of operating expense, and it varies. A lot of nonprofit organizations have the goal of having 50% of annual operating expense. So it does vary based on your circumstance, and I'll let Michelle chime in with her thoughts, but I think it truly does vary. The goal, though, would be for an extended period of time being able to continue on operations.
Yeah, it depends. Perfect answer, Justin. I think how a number of organizations look at this is how many days worth of cash do we have in the bank, so that you can kind of equivocate that to, if we don't get another dollar in, how many days can we make it before we collect any more memberships or sponsorships. And so it's the same thing that Justin said. Justin said if you did a whole year of sustaining reserves, you would have 365 days of cash in the bank. Okay, so you would take probably your budgeted expenses for that next year, divide it by 365, and come up with your daily operating expenses. And then it's a conversation of how many days do you want to have in the bank? Do you want the goal to be 365? And we'll work there by trying to get to 60 days cash on hand, 90, 180, and kind of building that out. But talking about, if you can boil it down to a day figure, then it can kind of help put it a little bit more in perspective, and kind of help it marry to your real operating. You mean, because one place could have $100,000 on hand, but that could only be 35 days worth of cash, which in the end of at the end of it is probably not a lot. Another person's 100,000, right, could sustain us for a whole year. So I would recommend, as you're establishing your reserve policy, to include looking at it with days cash on hand, what your goal is for the current year to build, and then what your 3 or 5 year position is, and how you want to be able to build that out to have some reserves to allow you to continue to focus on your mission.
And I would just kind of jump in there that I think part of the piece that both Justin and Michelle referenced is the your programmatic influence. If there's things that you have to commit to a year in advance, then that you need to make sure that you've got kind of coverage for that, even if the world changes. Whereas there are things that you can pivot on. So if we lost this funding, but then we didn't have to do that program, well, that doesn't necessarily need to be addressed in a reserves policy, because the minute the funding stops, the program stops. And so you don't necessarily need to build up a reserve for a program that could terminate on a at a dime, on a dime, literally. And so that's why it really does depend. There's a lot of the more kind of operational nonprofits that I've worked with, I encourage them to get to at least 6 months. And that's really a stretch for a lot of, smaller, nonprofits. And there's always a conversation of, if we're holding on to this money, that it's somehow, against the rules. It's absolutely, as Justin said earlier, it's not against the rules. It's actually good, business, good operations. Being a charity as a tax status, it's not a business model. And so it's really important that you kind of look ahead and are thinking ahead, which ties to the next item on this PowerPoint of strategic planning with financial goals. And I know that, some organizations, maybe do strategic planning once a year, or maybe once every couple of years. And usually there are great plans involved with creating a strategic plan. But what I've noticed is a lot of strategic plans don't necessarily include some of the financial goals. You're gonna, as high performing organizations, you're creating a budget, and that's great. But, a budget is, here's what we're pretty sure we can do, right? And then this is what we're aiming for. But, if you think aspirationally and you think of all the things we could do, what could we accomplish, and setting some financial goals tied to that. Because whenever we do these strategic plans, we think we have all the greatest hopes and aspirations, but then how are we going to get there, and what are the actual dollars and cents of that? So I think that's another important policy to have in place as you kind of continue to make progress on those kinds of issues. So let's see, I'm even slow when I'm advancing it for myself. See, it wasn't just you, Michelle. So now I get to talk for a few minutes. Oh, we only have 27 minutes left, so I'll try and keep it contained. But I get to talk about the 990, and as for those of you that I've worked with, this is just it's a very important form. And there's not a lot of people in this world that care about it, but I'm one of them. So really, I think some of the important things for you all to know is, what are the different 990 forms? There is the 990N. So if you have under $50,000 of revenue annually on an ongoing basis, that's a electronic postcard, super easy, no big deal, just get it done. It's where the IRS's online system it works really well. Over 50,000, but under 200,000 is the 990 EZ. You also have to have under $500,000 in assets. Still required to do some of the important pieces, but it's got all of the financial requirements. You have to kind of, provide a balance sheet and a profit and loss for year end. But it doesn't have, nearly there's only one page of questions. But it does include listing all of the board members, and includes all of that financial snapshot. And also importantly, it includes program information. Once you're over $200,000 a year, then you need the full 990. These on average are about 30 pages. There's that really depends upon how many schedules are needed. It's got a lot of questions. Many don't apply to the Crew Network family. But it's still necessary. And really the point of the 990 is the federal government gives entities basically permission to operate without having to pay income taxes. Like, you don't pay taxes on your revenue. And so that's it. In exchange for that gift of you as organizations not having to pay income taxes, they want to know what good you're doing in the world and how you're accomplishing that, and that you're not breaking the rules. And so really what the 990 is it's a report to say, thank you for our charitable tax status, and here's how we've done good in the world. And as long as that exchange happens on an annual basis, everyone is happy. And so that's part of what we're always going for, is how do we do that? So as a board member, what should you be looking at on the 990? This is, you want to make sure that you're not reporting anything that breaks the rules, right? If any of the work that you're doing is absolutely going into your mission work, then you should tell all the stories about that. But if you've started up a small business within your nonprofit and are generating some good revenue and using that revenue to do other things, then that's what the IRS doesn't want. So being attentive to make sure that your form reflects the charitable work, the charitable mission, and how the dollars, maybe you have revenue from investment income. It's very important that that investment income is considered excluded from related revenue, because that's not your mission. Investment income isn't your mission, but you're using it to accomplish your mission. Some of you do fundraising events, and they're important. In some of those cases, you're providing a service and an opportunity that's also excluded, because you're using that revenue to go back and support the mission. So then the other piece that board members should make sure they're looking at is, are we really clear in this document about what our mission is, what our work was during this year, and how did we accomplish it? I always like to remind people that the 990 is the only tax form that is automatically public. Everyone's 990 is out in the world and can be reviewed. Some of us do it for fun, but just making sure that you're actually really presenting the best of what your organization offers, because other folks might come in and want to address, want to be part of it and want to learn more. And they honestly might look to the 990 for information about that. So I always like telling people it's really a marketing document that's just disguised as a tax form. But if you read it that way, I think as a board member, you're going to be like, oh, I'm finding that I could improve upon this. I could change some of the wording here. So making sure that you're doing that. We've already talked a little bit about the, distinctions between sponsorship, donations, charitable contributions. Again, it's important that you all within your organizations are really clear on what you're offering, what you're able to offer. I know, Crew Foundation offers, a charitable contribution, through that structure. But as 501c6s, you are not able to offer that charitable contribution. I think that's I wouldn't spend too much time worried about the fact that you can't, because really, when it comes right down to it, people sponsor things, people donate to things because they believe in the work that's being done. That is never a primary reason why people start their engagement and start their either sponsorship or donation. So I would say encourage you to make sure you're selling all of the intangible benefits that you're offering when you have a sponsorship or when someone gives towards a cause. The visibility that you are able to offer to some of your sponsors at events and activities, and even on an ongoing basis through your websites, is really an important intangible benefit. Also, there's some language on the 990 that talks a little bit about memberships, and I know I've had a few conversations with crew associations over the years about when a membership is not a membership, and it goes back again to that tangible benefit phrasing. And as long as your memberships are only offering intangible benefits, then they don't really, in the IRS definition of the word, they're not a membership. And so it's very important that as you're reading through that, you're like, wait, we are a membership organization. Yes, you are. And we've got narratives around that, but also making sure that you're able to talk about that the benefits are intangible, and that's why it might look a little bit different on the 990. So with that, those are kind of the big things that I wanted to draw your attention to. As you know, many of you know, I could probably keep going on this, but I do see that there are some questions. So I don't know, Justin, do you want to jump in and share questions, or Michelle, did you have anything to add?
Not on the 990. That's your lane, babe.
I don't know that I have any questions on the 990 specifically. Just actually, there's a couple. The 50 to 200,000 is the 990 easy. Is that correct?
That is correct.
Okay. And then the 50,000 threshold is for your total revenues, not income, in order to file the 990. And
yes,
is that correct?
Yeah, it's gross. Yes.
Okay.
Mm-hmm. Yes. Thank you.
Yeah, there's a few other questions, and I've kind of been trying to respond to some of them.
Yeah, I'm seeing the question about what does tangible benefit mean for raffle prizes and stuff and such. Raffles are treated a little bit differently, and I would have to in most cases, unless it's a biggie, you know, if you're raffling a car, then that's, you know, but for you know, even, you know, kind of a prize basket that maybe is worth $400 or $500, you're basically, with a ticket, you're purchasing an opportunity. And so that raffle ticket itself isn't eligible. You know, I mean, it's not a contribution. You're just buying an opportunity. And you're using that revenue, obviously, to accomplish your mission, but it's, you know, it kind of wouldn't fit into that equation. But I'm out of my lane when we start talking about like the cars and the stuff, you know, the big stuff. I'd have to dive into that.
Justin, you're on mute.
I am, thank you very much. Regarding the raffle prizes and silent auctions for special events, just as clarification, in order for the individual to have a donation that is deductible as a charitable contribution, that activity does need to be run through a charity. And I know some chapters partner with other charities, as well as Crew Network Foundation is part of the reason why Crew Network Foundation exists, is to help chapters with some of their local charitable activities, such as scholarships or other charitable programs, if you will. So that money, if it's restricted for a charitable purpose, in order to be deductible as a charitable contribution, would have to be used for a charitable purpose. Other events such as special raffles or other fundraising drives that the chapter does, those those contributions or amounts would not be deductible as charitable contributions. In some cases, if a business is buying something at an auction or supporting the chapter, it may be deductible as a business expense, but not a charitable. So, so yeah, Erica, Michelle, go ahead. Any final comments? I've got a couple other bullet points of items to cover, but if for those participating in the webinar, if you do have any further questions, please do post them in the Q&A section. We'll try to address them as well. So.
Yeah, I don't have anything, but thanks so much for having us. Really enjoy working with you all. And always feel free to reach out to me if you have any specific questions.
Absolutely.
The only other couple comments or side comments that I had that came up as we were going through, one was talking about reserves, and is it okay, you know, we talked about having reserves or a rainy day fund, if you will, to be able to continue on operations. You may also have other designated reserve accounts. For example, if you wanted to have a special speaker or something that would not normally be covered by your operations, as a matter of budget, I think Michelle referred to this too as we were talking about budgeting. It is appropriate to allocate or have a planned contribution to your reserve accounts within your annual budget in order to build up that reserve to your target balance. But if you did want to have a special speaker or maybe have an event at a special location, you could plan for that a year or two in advance and set aside some money to cover the additional expense that may not be covered by the registration fees or other specific designated revenue for that event. Another topic that came up as we talked about the segregation of duties. Chapters are often smaller organizations, and when your leadership changes every year, there is the opportunity for fraud and other outside parties wanting to create opportunities to steal money from the organization. And I've not seen it as much lately, but I do occasionally have emails that come up, and we've seen some within the chapter organizations. A criminal will go onto the chapter website, find out who the leaders of that chapter are, and will impersonate that individual to get a check written to another organization. So it is important if there's usually, like if it's an emergency payment, a payment has to be done right away, or if you don't, a lot of times the grammar in the email will not be in proper, they would not use proper grammar. Be very careful, and it may be often just as simple as picking up the phone and calling the individual that you received an email from, just to verify that, hey, this payment does need to go out. Many chapters use accounting firms, or Crew Network also provides accounting services for about half of our chapters as well. That we do have segregation of controls on our end to make sure that there is proper approvals, or approvals are gained from the proper parties, as well as having different check signers from the person that is actually issuing the check. So I cannot speak specifically to how many chapters have finance committees, but that is one of the questions that came up. The treasurer should be would be often be responsible for chairing the finance committee for a chapter. Sometimes the finance committee can be a subset of board members, or you can also bring in additional members as you normally would for a committee. I do recommend certainly that a finance committee is in place for every chapter. and the number of individuals serving on that committee could be up to the discretion of that chapter. So, let's see, Erica, I'm not sure, when discussing two categories with donor restrictions and without, you said it stays with it. What is it? I'm not sure I'm
Yes.
understanding that question either.
Yeah, I was just trying to type the answer, but
Okay.
it's probably easier to go at it verbally. So any gift that is donor restricted, as long as the organization is holding on to that gift, it needs to be specified on the balance sheet as with donor restriction. And then if, so it doesn't get to, until it's used for that purpose, it doesn't get to leave that category on the balance sheet. So that's probably where my imprecise language makes the CPAs that I work with on a daily basis a little twitchy. But then then there's unrestricted. So most of your general funds fall into those unrestricted without donor restriction. But those are two pretty distinct boxes. And it's important that they not be that we don't think that there's flexibility there. A donor restriction, it has to stay there until that purpose is met. Once the purpose is met, that fund is gone. But as long as as long as the activity hasn't happened yet and you hold the dollars, it needs to be specified that that's on your balance sheet in that way. So hopefully I answered that question.
Well, maybe an example might help, Erica. So outside of sponsorships, maybe you have a chapter member that says, I would like to donate $5,000 for you to be able to buy books to give to college students who are considering a career in commercial real estate. Okay, so they've said the restriction is that it has to be used for books and that they're giving it directly to the chapter. So until you use it for books, that money isn't available for general usage. Does that kind of make sense? I guess is by saying what a possible restriction might be. I don't think you'd see a ton of them at the chapter level. It happens a lot at the 501c3 level, but it still happens. And that you have to honor the donor's wishes with how you agreed to spend that money, which is why we are saying be real careful about what kind of gifts you accept and what you agree to be able to spend the money on. Does that make sense?
And I'm just typing in, someone asked to put our contact information up here. So I'm just putting it in the chat so that you have access to that.
And I did have a question or kind of a comment that came up in the question answer was, yes, just as clarification, if you're calling a person to verify, an emergency request or something for a payment, make sure you call the number that you have for that individual, not necessarily what it shows up in their signature, because that is something that would come up. And a lot of times in nonprofits, you have different volunteers on the board that are not voice familiar with one another, and their contacts may not show up. So yes, it is important to either verify or call the number directly that you have, or have some other verification that you are talking to the individual you think you're talking to. So thank you for that clarification. And I believe at that point, or at this point, I think we've answered all of the questions that have been submitted. If not, you feel free to email me as well. You have the contact information for both Erica and Michelle in the comments. And then I'm Justin H at crewNetwork.org, and you're welcome to email me any questions that you may have at any time as well. So thank you. And with that, I do not see any more questions, so I believe we are adjourned.
Y'all.
Thank you.
Thank you.